Welcome back to the CryptoBot channel, everyone. My name is Josh, and in this video, I'll be giving you an update on the Bitcoin and Ethereum price later in the video, but in just a moment, I'll be covering some important Bitcoin news today, because the Bank for International Settlements, which by the way is basically at the top of the entire global banking system, just released a new crypto article providing proposed crypto regulation for the banks around the world, and it specifically mentions stablecoins and Bitcoin. So more on that in just a moment. Definitely stick around. Just starting off with the huge news regarding the Bank for International Settlements, BIS for short. But first of all, what is the BIS? And basically, they're the central hub for the entire global banking system. In fact, the BIS says their mission is to support central banks' pursuit of monetary and financial stability through international cooperation and to act as a bank for central banks. So just a basic explanation of the structure of the global banking system would start off with the retail banks towards the bottom level, which are basically the banks that you or I might bank with, such as if you're in Australia, Commonwealth Bank, or in America, JP Morgan. And then all of the different retail banks bank with the central bank of that country, and usually each country has its own central bank, such as the Reserve Bank of Australia, or if you're in the US, the Federal Reserve being one of the most famous central banks. And then going up one more level above the central banks, we have the Bank for International Settlements, which is basically the bank for central banks. So this obviously means the BIS plays an incredibly important role as the top of the pyramid, the top of the banking structure. And just a few days ago, the BIS released this report specifically about crypto assets and the exposure other banks around the world have to crypto. Now, I will not be going through this entire report in this video because it's 39 pages long. Instead, I'll just quickly point out some of the important factors that we need to know. And the first important thing to know about this document is that right now, it is simply a proposal that is issued for comment by the 30th of September this year. So this leaves a few months for the central banks around the world to either agree or disagree on what this says. And this proposal by the BIS splits up all of the crypto market into two separate groups, Group 1 and Group 2. The crypto assets that are grouped into Group 1 are those that meet in full a set of classification conditions. And these conditions are that Group 1 crypto assets include tokenized traditional assets, such as stocks, for example, and crypto assets with effective stabilization mechanisms, such as stablecoins, for example. And then after that, it goes on to say that those stablecoins basically need to be subject to some risk requirements. So basically, you're not going to be finding a stablecoin like UST in Group 1. And the crypto assets that fall under Group 2 are those that fail to meet any of the classification conditions that I just mentioned. So basically, if the crypto is not a tokenized version of a traditional asset, and if it's not a very safe stablecoin, then it falls under Group 2. So obviously, by that definition, the majority of the crypto market, even Bitcoin and Ethereum, for example, fall under Group 2. And it says here under Group 2 that the Group 2 crypto assets pose additional and higher risks compared to Group 1 crypto assets, and consequently would be subject to a newly prescribed conservative capital treatment. So basically, by that definition, the BIS want some sort of limits on how much of a bank's reserves can sit in crypto assets that fall under Group 2, which is the majority of crypto assets. Now getting into some of those proposed limitations, and as you can see right here, the large exposure rules of the Basel framework are not designed to capture large exposures to an asset type, but to individual counterparties or groups of connected counterparties. This would imply, for example, no large exposure limits on a crypto asset where there is no counterparty, such as Bitcoin. The committee proposes, therefore, to introduce a new exposure limit for all Group 2 crypto assets outside of the large exposure rules. And the Group 2 exposure limit has the following features: provisional limit set at 1% of Tier 1 capital to be reviewed periodically, and that limit is applied jointly to all Group 2 crypto assets on gross exposures with no netting or recognition of diversification benefits. So basically, under this proposal, the banks around the world would be allowed to have up to 1% of their reserves sitting in Group 2 crypto assets. But once again, that limit is applied jointly across all Group 2 assets, which means, for example, a bank would not be allowed to have 1% of their reserves in Bitcoin and 1% of their reserves in Ethereum. They'll have to choose one or the other, or have, let's just say, 0.5% in Bitcoin and 0.5% in Ethereum. So obviously, coming from the Bank for International Settlements, this is actually quite a big deal. Even though they're proposing a limit of only 1% to Group 2 crypto assets such as Bitcoin and Ethereum, that is still a step forward for something like Bitcoin, for example, becoming a reserve in multiple banks around the world. And when you consider the fact that the head of the BIS just 4 years ago called Bitcoin a Ponzi scheme and an environmental disaster, since then, just 4 years ago, progress has definitely been made if the BIS is now proposing some sort of 1% limit for banks around the world to hold Bitcoin and crypto as their reserves. But on top of what they covered in this report, one of the key details to take away is what they did not cover, which are the limitations for the Group 1 crypto assets, and this suggests that there isn't limitations for the Group 1 crypto assets. So that might mean that this Group 2 exposure limit might be a bit of a distraction away from what's really happening with the Group 1 crypto assets, where they specifically mention that those Group 1 crypto assets could be bank-issued crypto assets. That is right, banks could start issuing their own crypto coins, along with tokenized claims on a bank. And once again, these type of crypto assets that they're making themselves fall under Group 1. And once again, these will have apparently no limitations based on this proposal. And that starts entering the realm of CBDCs, central bank digital currencies, which are really starting to heat up. And honestly, these CBDCs could start rolling out in the coming years. And if you have no idea what a central bank digital currency is, I could cover it in a separate video if you want to in more detail. Otherwise, in the meantime, I suggest you doing some research on CBDCs because that is an important topic for not just crypto, but overall in finance. And now jumping into the chart, this right here is the daily Bitcoin chart. And honestly, nothing much has changed on this chart since yesterday. We still have a potential bear flag pattern here, which is very similar to what we saw back here. But for now, in the short term, whether it plays out as a bear flag or not, I'm expecting a lot of choppy sideways price action because we're starting to see a potential uptrend form in the daily Bitcoin RSI, like what we saw back here, and also like what we saw in the first quarter of this year, where we played out a lot of choppy sideways price action in those regions. And zooming into the shorter term here on the 4-hour Bitcoin chart, it's also a very similar thing to what I said yesterday. I still expect a lot of choppy sideways price action with an immediate level of support at this golden pocket, which is sitting at around 19,000. And if we confirm a break below that level just there, I would expect a pretty quick drop down towards the 78.6% Fibonacci level, which is also the first technical price target for this rising wedge pattern. And that is sitting at around 18.3K to 18.4K. And anything lower than that, and I'll be looking towards this previous low at around 17,500. And looking at the 4-hour Bitcoin RSI and the 4-hour Bitcoin MACD, we're seeing very low momentum at the moment in both of these price oscillators, which is another indication on the chart pointing towards some more choppy sideways price action as the most likely scenario in the shorter term. And if you're new to the channel and you want more information than just that, check out my last video on the channel where I went into more detail about these Bitcoin charts. And now heading into the Ethereum part of this video, this right here is the 12-hour Ethereum to US dollar chart. And as of right now, we're still holding along this upwards trending line of support, which is currently coming into play at around 1,030, which is right in between a level of support at around 1,050 that we have on the weekly chart that I covered in my last video once again, and also the $1,000 level of support. And as for resistance, I'll be looking towards this level just here, which is coming into play at around 1270 to 1280. And now zooming in a little bit further into the 4-hour Ethereum chart, and we're still finding support along this golden pocket, which was also the first technical price target for that rising wedge pattern, and that is coming to play at around $1,000. And if you're looking at the 4-hour Ethereum RSI, this is showing a bit more of an uptrend on the 4-hour time frame than the Bitcoin 4-hour RSI. So this potentially means we have a little bit more short-term bullish momentum for Ethereum than Bitcoin at the moment. But if you're looking at the MACD indicator, you can see the histogram is pretty much flat at the moment, which means the bullish momentum isn't really that significant. So I'm still expecting mostly choppy sideways price action in the short term for Ethereum. Ethereum. And also just letting you know, I've posted more updates on the Celsius situation over on my Twitter, which I've linked down below in the description and the pinned comment, because over the past 24 hours, Celsius has paid down one of their loans by 65 million US dollars. And over the past 48 hours, Celsius has paid down 3 of their debt positions by over 100 million US dollars. But once again, you can find more updates on my Twitter linked down below. And also make sure to check out one of these videos popping up right here if you want to know how to make money, whether or not the price is going up or down. Or the video in the bottom left shows you how you can make money in choppy sideways price action, which is a useful one to watch. But anyway, that is everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.